Okay, so who hasn't thought about, like ditching the 9 to 5 and just like trading shares? It's got to have crossed your mind at least once, right?
No, it's certainly a tempting idea.
Oh, yeah.
And that's exactly the kind of straight-talking approach you'll find in The Naked Trader by Robbie Burns.
Yeah, I was really drawn to that, like, down-to-earth style.
Yeah, it's not some jargon-filled finance textbook, you
Right,
know?
right.
It's a real practical guide written in plain English for everyday people.
Absolutely.
And what I find so inspiring about Robbie's story is he started small, just like many people listening probably, gradually built his capital, his knowledge, all while still working other jobs.
I mean, that's what really got me hooked on the book. It's proof you don't need to be, like, a Wall Street hotshot
Exactly.
to make it in this world. So in this deep dive, we're going to break down some of Robbie's key strategies,
Yeah.
from how to find those promising shares
Yeah.
to how to avoid those classic mistakes that can really trip you up.
Yeah, there are some absolute gems in this book, practical advice that you can start using right away.
Definitely.
And one of the first things Robbie really emphasizes is the importance of, he calls it his lazy trading approach.
Lazy trading.
Yeah, but don't let that fool you. It's not about being passive.
Right.
It's actually about discipline. It's about resisting the urge to overtrade, like constantly jumping in and out of the market.
Yeah.
He's all about like really focusing on research, planning your trades, not just like staring at the ticker all day.
Oh, I felt that. I used to be like glued to the charts, refreshing every 5 minutes.
Yeah. And Robbie argues that all that market watching, it can actually lead to emotional decisions, impulsive trades.
Oh, definitely.
Like you see a dip and you panic, or you see a little spike and you get greedy.
That's like a roller coaster of emotions.
Exactly.
Yeah.
So he suggests, checking in periodically throughout the day, obviously, but using the bulk of your time for other things.
This really hit home for me. It's about having a life outside of trading too,
Yeah,
right?
absolutely.
Okay, so let's say you're ready to dive into the market.
Mm.
Before you even think about buying a single share, there's something crucial Robbie talks about.
Yeah, absolutely. You really need to take an honest look at your financial situation, your risk tolerance, Can you realistically afford to, lose some, maybe even all of your investment?
Yeah.
Trading, it always involves risk.
Right?
It's got to be something you're prepared for, both the wins and the losses.
For sure. And Robbie doesn't sugarcoat it.
No, not at all.
He's very upfront. A realistic expectation, he says, is like a 25% return per year.
Yeah.
But you could also lose, 20, 30%.
That's the reality.
Yeah. And he emphasizes that it's so important to detach from your emotions when you're trading.
Absolutely.
Don't let fear or greed call the shots.
Easier said than done sometimes.
Yeah, for sure.
He even goes into the dangers of, getting so emotionally involved it becomes like a gambling problem.
Right. So if you're finding yourself, always chasing losses or making impulsive bets, maybe it's time to take a step back and just reassess your whole approach.
Absolutely. Take a breather.
Yeah.
Now, assuming you've got your head in the game, comfortable with the risks, what's the next step to actually get started?
So Robbie, he recommends choosing what's called an execution-only broker.
Execution only?
Yeah, basically they just execute your trades.
Yeah.
They don't give you advice.
Okay, got it.
And he especially highlights the benefits of ISAs for UK investors.
And ISAs.
Yeah, those accounts that let you shield your profits from taxes.
Right.
Which can make a massive difference.
Yeah, for sure. Maximizing those gains.
Exactly.
All right, so let's get to the good stuff.
Yeah.
How do we find those winning shares? Robbie's big on this idea of building the story of a share before you invest.
Mm-hmm.
So you're not just looking at the numbers, right?
You're digging deep into the company's financials, looking at their sector. What's the market outlook, debt levels, dividends, recent price movements.
Yeah. You want the whole picture
Right.
before you make a move.
Okay, so how do we do that? Where do we even start?
Well, he's got this really cool system he calls the Naked Trader traffic lights.
Traffic lights?
Yeah. It's a quick way to assess a company's reports, get a sense of the overall sentiment. Like imagine you're reading through a company's annual report, right? And you keep seeing words like challenging or difficult.
Uh-oh. Red light?
Big red flag.
Okay.
But on the flip side, if you're seeing, profit up, positive outlook.
Green light.
Green light, exactly. Potential strength there.
Okay. I like that.
It's simple but really effective,
Yeah.
just to get a feel for the direction the company's heading in.
Okay, so we're looking at the reports, watching for those traffic lights. Anything else that really stands out as a warning sign?
One of the biggest red flags Robbie talks about is high net debt.
Net debt.
Yeah, so that's basically the company's total debt minus the cash they have on hand.
Okay.
If a company's carrying a lot of debt, that can be a sign of trouble.
It's like looking under the hood of a car before you buy it.
Exactly.
You want to make sure there are no hidden problems.
Precisely.
Now, let's talk valuation. How do we know if a company's share price is, actually justified? Robbie's got this interesting concept he calls the billionaire test,
Yeah.
which sounds pretty intimidating.
It's actually super simple.
Yeah.
It's a quick way to check if a company's share price is in line with how much money they're making.
Okay, so how does it work?
So you take the company's market cap, which is like the total value of all their shares,
Mm-hmm.
and divide it by their annual profit.
Okay.
That tells you how many years it would take for their current profits to cover their entire market value.
So basically, if you could buy the whole company at its current price, how long would it take to earn back your investment based on what they're making now?
Exactly. The lower that number, the better the value.
Makes sense.
Of course, there's no magic number.
Right.
You have to consider other things like growth potential, the overall market.
But it's a good starting point, right?
Absolutely. To see if the share price is, realistic.
Now, we've talked about research, but what about insider information? Does Robbie have any tips on that?
He does mention the importance of keeping an eye on directors' dealings.
Directors dealing.
Yeah, you know those public records of when company directors buy or sell shares in their own company?
Okay, right.
Now, it's not always a guaranteed signal,
Right.
but if a director is buying a big chunk of shares,
It could be a vote of confidence.
yeah, like they believe in the company's future.
It's like, would you trust a chef who won't eat at their own restaurant?
Exactly.
Okay, that makes sense.
But you always have to look at the context, right?
Yeah.
Is the director buying a tiny amount compared to what they already own?
Right.
Or a significant portion? The proportion can tell you a lot more about their intentions.
So we've covered some of the key research points, but now let's get to the exciting part.
Yeah, the actual trading strategies.
Robbie lays out quite a few in the book, but let's focus on a couple with some really interesting real-world examples.
One that stood out to me was keep your head when others lose theirs.
Keep your head when others lose theirs. Okay, what's that all about?
It's about taking advantage of those moments when the market overreacts to news.
Like, everyone's panicking, selling off.
Exactly. Robbie gives a great example with a company called Greencore. They make convenience foods.
Okay.
There was this news story that came out, and their share price just plummeted.
Oh, wow.
Most investors freaked out, sold their shares. But Robbie, he saw an opportunity.
Wow.
He realized the market had totally overreacted.
Mm-hmm.
The company's fundamentals were still strong.
Okay.
So he bought shares at a discount and ended up making a nice profit when the price bounced back.
So it's about, not getting swept up in the emotional wave.
Right.
Sometimes the best opportunities come when everyone else is losing their cool.
Exactly. Having the courage to go against the herd and trust your own research.
Now, this next strategy, this one really speaks to, my inner bargain hunter.
Yeah.
Shop till you drop.
Yeah. This one's fun. It's all about observing retail trends and using that to make trading decisions.
I love that.
Robbie tells this story about how he shorted Superdry, the clothing brand.
Okay.
Based on his own observations, he felt like customer sentiment was declining, that the company was overvalued.
Mm-hmm.
He'd noticed their stores were getting less popular, had a hunch their high growth days were over.
And was he right?
Spot on.
Wow.
The share price tanked and he made a killing.
So you don't need to be some, financial genius to make smart decisions.
Not at all. Sometimes it's just about paying attention to the world around you.
Connecting the dots.
Exactly.
Okay, so we've talked about bargain hunting, but what about spotting those companies that are about to, explode in value?
Yeah, Robbie calls those the game changers.
Game changers.
Okay.
The ones that are disrupting industries, poised for massive growth.
Mm.
He uses Telecom Plus as an example.
Oh, yeah.
They really shook up the UK telecoms market, offering bundled services, gas, electricity, phone, all at really competitive prices.
Yeah, I remember that.
They challenged the big guys, gained huge market share, and their stock price just soared.
So it's about finding those companies that are rewriting the rules, right?
Exactly.
The ones on the verge of something big.
Yeah. It often means looking beyond those traditional metrics
Okay.
and understanding the bigger picture of how tech, consumer behavior, everything's evolving.
Now, this next one might appeal to people who like a bit of a challenge, like a puzzle to solve. Bid spotting.
Ah, yes.
This is all about anticipating company takeovers.
Exactly.
Right.
When a company gets acquired, their share price usually jumps up.
So if you can get in before the announcement, you could make a decent profit.
Precisely.
Now, how do we spot these potential acquisitions? Well, Robbie has a knack for it. He mentions profiting from companies like AGA, Fenner, PaySafe, WorldPay, all of which eventually got acquired.
Wow.
This strategy, it takes more research, definitely.
Right.
You need to understand industry trends, potential buyers, the underlying value of companies.
Like being a detective.
Yeah, piecing together the clues
Yeah.
to see if a takeover might be on the horizon.
All right, so we've talked about all these exciting strategies, but we have to talk about some of the pitfalls, right?
Absolutely.
What are some of those common mistakes that new traders make?
I'd say one of the biggest ones is letting your emotions drive your decisions.
Ah, yeah. Getting caught up in the hype or the fear.
Exactly. And then making impulsive trades that you end up regretting.
So what's the antidote to that?
Having a clear plan for every trade.
That plan.
Before you even think about buying, ask yourself, why am I buying this? What's my exit strategy?
What's my stop loss level?
Ah, yes. Stop losses, your safety net.
So it's like a predetermined price where you automatically sell if it drops too low.
Exactly. They help you limit losses, protect your capital.
It's like an insurance policy.
Exactly.
You hope you never need it,
Yeah,
but you're glad you have it.
absolutely.
Robbie also talks about trailing stop losses.
Ah, yeah. Those are clever. So that's a stop loss that moves up as the share price increases.
So you lock in profits,
Exactly.
protecting you from a sudden drop.
So let's say you buy a share at £10 and set a trailing stop loss at 10% below. As the price goes up, your stop loss adjusts with it.
So if it suddenly drops, your shares are automatically sold at that higher price,
Exactly.
protecting your profit.
It's a great way to ride the upward trend, but minimize potential losses.
Smart. Now, unfortunately, the world of trading has its share of shady characters, right?
Oh yeah, there are definitely people out there looking to take advantage, especially of newcomers.
So what should people watch out for?
Robbie warns about those tipsters, the self-proclaimed experts who promise quick riches.
Yeah, rich, quick schemes.
Exactly.
Yeah.
They often push penny stocks, artificially inflate the price.
Then dump their shares, leaving everyone else holding the bag.
It's a classic pump and dump.
So if it sounds too good to be true,
It probably is.
right? Do your own research.
Absolutely.
Now, before we move on, Robbie also touches on investment options beyond just buying individual shares, right?
Yeah, he talks about things like spread betting, investment trusts, and ETFs.
Spread betting, that sounds intense.
It can be.
What's that all about?
Well, it's basically betting on the direction of a share price.
Okay.
You're not actually owning the shares.
Right.
So it can amplify your gains, but also your losses.
High risk, high reward.
Exactly.
Yeah.
Not for the faint of heart.
Definitely need to do your homework on that one. Now, investment trusts, those sound a bit more manageable.
Yeah, they're essentially funds that invest in a basket of shares, often with a specific theme, like technology or emerging markets.
Right.
So it's a way to diversify. And you have professional management.
So a more hands-off approach.
Exactly.
But they do come with fees.
Yeah, you always have to factor that in.
Okay. And finally, ETFs.
ETFs, or exchange-traded funds.
Right.
Kind of similar to investment trusts,
Okay.
but they usually track a particular index, like the FTSE 100.
Right.
A very simple, cost-effective way to get exposure to a specific market.
So another good option for diversifying.
Precisely. But like with any investment, there are risks involved.
Yeah, of course.
So you want to make sure you understand the underlying index, the potential downsides.
Do your research.
Always.
So we've covered a lot of ground in this first part of our deep dive.
We have.
We've explored Robbie's approach to research those key strategies and hopefully help you avoid some of those common mistakes.
Definitely.
But this is just the beginning.
Yeah, we've got more to uncover.
Definitely.
So stay tuned.
All right, we'll be right back.
Sounds good. All right, welcome back to our deep dive into The Naked Trader.
I'm really excited to continue exploring this book.
Yeah, me too.
This section, it's all about like the human side of trading,
Exactly.
hearing those cautionary tales, Learning from other traders' mistakes.
Yeah, it's one of my favorite parts.
Me too, actually.
Yeah.
It really brings it all to life.
It does.
You know, it's one thing to read about trading strategies, but it's a whole other thing to hear about real people's experiences, right?
Absolutely. It makes it so much more relatable.
Yeah, and Robbie, he doesn't shy away from sharing those stories.
No, not at all. He's very open about it.
Like he tells this story about Phil, who got caught up in the excitement of a winning trade, ended up losing a big chunk of his capital in, like, one day.
Oh, yeah. Phil's story, it's a classic example of how emotions can really cloud your judgment.
Yeah. He hit his initial stop loss, panicked, and then decided to hold on, hoping for a recovery.
Which didn't happen.
Nope. The price kept dropping, and he watched his profits just vanish.
It's a good reminder that even when you have a plan, fear and greed can take over.
Yeah. Leading to those impulsive decisions.
Exactly. The ones we want to avoid.
And then there's Barbara's story.
Oh, yeah. Barkley.
She had this, like, incredible winning streak, almost a year. But then success kind of went to her head.
Yeah, she became overconfident.
Started taking bigger risks.
And then the market turned against her.
Lost a huge portion of her profits.
A tough lesson to learn.
It really is.
Yeah.
It shows that, like, even when you're on a roll, you have to stay grounded.
Yeah, stick to those risk management principles.
Don't get swept up in the euphoria of winning.
Easier said than done, I know.
Definitely. And then we have Jamie, who got bored with his, like, carefully thought out strategy.
Oh, no. What did he do?
He decided to try spread betting.
Oh, no.
That's
a slippery slope.
It is. Made a bunch of impulsive trades, wiped out his entire account.
Wow, in minutes.
Yeah. It just shows the dangers of, like, chasing excitement.
And straying from your plan.
Exactly. Spread betting, it's incredibly risky.
Especially if you don't fully understand how it works.
Right. You can lose money really fast. So these stories, they're like these mini case studies, right?
Yeah, I see him that way too.
Reminding us that there are real people behind these trades.
With real emotions.
Yeah. It's easy to get caught up in the numbers and the charts.
It is.
But, you know, trading, it's a human endeavor.
It is.
Our psychology plays a huge role.
Absolutely. So after sharing those cautionary tales, Robbie kind of distills everything into a set of golden rules.
Ooh, golden rules. I like that.
Hard-won lessons from his years of experience.
Okay, like what are some of those rules?
So one that really stuck with me was don't buy shares with tiny market caps.
Tiny market caps. What does that even mean?
Basically, those are often what people call penny stocks.
Right.
And they can be incredibly illiquid, meaning it's really hard to sell them when you want to.
Okay, so you get stuck.
Yeah, exactly. Like being in a traffic jam with no way out. You might have a great opportunity, but if you can't get out when you need to, you could lose money.
Yeah, that makes sense.
He also warns against blindly following directors' dealings.
Oh, right. Because earlier we were saying that could do a good sign.
Yeah, but it's not always a guarantee.
Okay.
You know, just because a director is buying doesn't mean it's a good investment. Always do your own research.
It's like getting a restaurant recommendation from a friend.
Exactly.
You might trust their taste, but you'd still check the menu, maybe look at some reviews.
Absolutely. Another key rule is don't be greedy and think you're going to make a fortune on a tiny prospecting share.
Okay. Prospecting share?
So those are companies that are still in the very early stages.
Right.
Exploration, development.
Okay.
Inherently risky.
Yeah, I can see that.
Huge potential for gains, but also a high chance of losing everything.
So it's like betting on a long shot in a horse race.
Exactly. You might get lucky, but the odds are not in your favor.
And Robbie's pretty clear about relying on gut instinct. He says never use gut instinct.
Yeah, that's a big one. Trading should be based on research, analysis, a solid strategy.
Not just hunches or feelings.
Exactly. It's not about gambling. It's about calculated decisions.
Okay. Any other golden rules that stand out?
Oh, yeah. He stresses the importance of looking at a company's debt levels.
Right.
Don't buy companies with big debt. High debt can be a sign of trouble, you know?
Yeah.
Limits a company's growth potential. It's like taking out a massive mortgage.
On a house you can't afford.
Exactly. Might seem okay at the time, but it can come back to bite you.
And, of course, we have to talk about those pump and dump schemes.
Ah, yes, the classic.
Robbie says, beware of pump and dumps.
They're everywhere, unfortunately. Orchestrated efforts to inflate a share price and then dump it, leaving everyone else holding worthless shares.
It's like going to a carnival and playing a rigged game.
Exactly.
You think you're going to win, but the house always wins. So these golden rules, they sound simple, but there's a lot of wisdom there.
There is.
Learning from others' mistakes, approaching the market with, like, a cautious but opportunistic mindset.
That's the key.
Now, one question that comes up a lot in the book is about that dreaded tipping point. When emotions take over.
Ah, yes, when rational decision-making goes out the window.
Robbie, he really stresses the importance of knowing your own triggers.
Absolutely. What are those things that might push you toward, irrational behavior?
It might be a sudden market drop that makes you panic and sell everything.
Or a string of losses that makes you chase those risky bets.
Right, trying to recover quickly.
Whatever it is, being aware of it can be a huge help in avoiding those costly mistakes.
So it's about developing that emotional intelligence, right?
Yeah, having the self-awareness to step back, reassess.
And make decisions that align with your plan.
Exactly.
Don't let your emotions control your trading.
It's hard, but it's essential. And remember, trading is a marathon, not a sprint.
Right, it's about consistency.
Informed decisions over time, not about getting rich quick.
Now, Robbie, he really encourages readers to, go beyond the book.
He does. He provides a lot of resources.
Yeah, his website, podcasts, even invites people to his seminars.
Which is great.
Yeah, you can learn directly from him.
Connect with other traders.
It shows his commitment to building that community. Now, there's this one anecdote that I thought was really insightful. It's about an accountant who went to one of his seminars. This accountant, he was obsessed with analyzing every single detail.
Oh, wow.
Using all sorts of complex formulas, ratios.
A master of spreadsheets.
Yeah. But here's the thing.
What?
He was so paralyzed by analysis, he could barely bring himself to buy any shares.
Oh, wow.
Yeah. He was constantly finding reasons not to invest.
So he was missing out on opportunities.
Out of fear of making a mistake, it's like someone who spends hours researching the perfect vacation.
But never actually books the trip.
Exactly.
They get so bogged down in the details that they miss the whole experience.
Yeah. And Robbie uses that story to show the danger of overanalyzing.
Right.
You need to find that balance between research and action.
You do. You have to do your homework, but then have the courage to jump in.
Exactly. As Robbie says, sometimes you just have to trust your research, make a decision, and jump in.
Don't let fear hold you back.
So that's where the beauty of his approach lies, right?
Yeah.
It's making trading accessible.
Demystifying it.
He doesn't overwhelm you with jargon.
Or complex theories.
He focuses on practical steps.
Common sense.
Emotional intelligence. You don't need to be like a math whiz.
Or a Wall Street insider.
Yeah. You need a disciplined mindset, a willingness to learn.
And a healthy dose of skepticism.
So now you might be wondering about Robbie's own trading journey.
Yeah, what does his portfolio look like?
He's actually super transparent about it.
He is.
He shares a breakdown of his ISA portfolio in the book.
Oh, cool.
Yeah, it's like a real-world example of his principles in action.
Yeah, I like that.
You can see how he applies his strategies.
To different kinds of companies.
Yeah, from those big blue chips to smaller, riskier ventures.
So he's got a diversified portfolio.
Exactly. He doesn't put all his eggs in one basket.
Makes sense. Spreads the risk.
Yeah, helps to smooth out returns over time, like having a balanced diet.
I like that analogy.
And he's also got that long-term perspective, right?
Yeah, he's not chasing quick profits.
No. He's looking for companies with solid fundamentals, potential for sustainable growth.
It's like planting a tree.
You don't expect fruit overnight?
You nurture it, give it time, and eventually reap the reward.
Exactly. And of course, he's all about managing risk.
Yeah, always using those stop losses.
Right.
To protect his capital.
I know even the best traders make mistakes.
They do. So it's about having systems in place to minimize the damage.
Right. So his portfolio, it really reflects that disciplined, patient approach.
Yeah, not about getting rich quick. It's about building wealth steadily.
Now, one of the things that makes The Naked Trader such a fun read is Robbie's sense of humor.
Oh, yeah, he's got a great sense of humor.
He makes what could be like a dry topic so engaging.
Absolutely.
He cracks jokes about the market, pokes fun at himself.
Makes you feel like you're chatting with a friend.
Yeah, not some stuffy expert. Like, he tells this hilarious story about going to a Fulham football game with his son.
Oh, I remember that one.
Yeah, enduring the grumpy old fans, the questionable food.
The smelly bus ride home.
It's a good reminder that even successful traders, they're human.
They are. Dealing with the same everyday stuff as the rest of us.
Exactly. He also pokes fun at consumerism.
Oh, yeah. Like what?
Like, he was amused by the news that walnut whips wouldn't have walnuts anymore.
Walnuts.
Yeah, and he complains about the shrinking size of chocolate bars.
I can relate to that.
It's those moments of levity that make the book such a joy to read.
They do. You're learning valuable lessons, but also having a good laugh.
So, as we head into the final part of our deep dive, let's recap what we've learned.
Yeah, good idea.
We've heard those cautionary tales, those golden rules for success.
We got a glimpse into Robbie's personal trading journey.
And we've seen that trading, it's not just about the numbers.
It's about psychology,
Managing emotions,
finding that balance.
research and action. But there's more to come. Stay tuned. All right, welcome back to our final deep dive into the naked trader.
I'm excited to wrap this up, see what final gems we can uncover.
Me too. I really like how Robbie empowers readers to become, like, independent thinkers.
Yeah, he doesn't want you to just blindly follow his system.
Right. It's about understanding the principles.
And then applying them in a way that suits you.
Exactly. Your own goals, your own risk tolerance.
And he does such a good job of breaking down these complex concepts,
Yeah.
making them easy to understand no matter what your financial background is.
Throughout the book, he really pushes this idea of continuous learning.
Oh, yeah. He gives you tons of resources.
His website, podcasts, book recommendations, online tools.
He wants you to keep learning, basically.
Become a lifelong learner,
Yeah.
always expanding your knowledge.
He even encourages readers to attend his seminars,
Yeah, where you can actually interact with him.
ask questions, learn from other traders.
He's really building a community.
He is,
Oh,
which I think is fantastic. Now, one of the most important concepts he talks about is this idea of identifying your own tipping point,
tipping point.
that emotional trigger
Oh, right.
that can lead to those bad trading decisions.
When fear or greed takes over.
Yeah, it clouds your judgment.
And it's different for everyone, right?
It is. For some people, it might be a market drop.
Makes them panic, sell everything,
For others, it might be a series of losses,
leading them to chase those risky bets.
trying to recover quickly.
Right, right.
Yeah.
So the key is to know your own triggers.
Absolutely, those emotional patterns.
And once you recognize them, you can, like, manage them better.
And hopefully make more rational decisions.
So what are some ways to manage those emotions
Well, sometimes it's as simple as just stepping away.
from the computer?
Yeah, when you feel those emotions building up.
Take a break.
Or, talk to someone you trust.
A friend, mentor.
Get an objective perspective.
The main thing is don't let your emotions rule your trading.
It's so important. And remember, trading, it's a marathon.
Not a sprint.
Consistency is key.
Informed decisions over time.
Not about getting rich overnight.
Now, at the end of the book, Robbie has this little quiz.
A quiz.
Yeah, to assess your trading readiness.
Oh, interesting.
He asks you to evaluate your knowledge, your risk tolerance.
Emotional discipline.
It's a good way to see, are you really ready to jump in?
Yeah, a reality check.
So as you venture into this world of share trading, keep these takeaways from the naked trader in mind.
Yeah. What are those key things to remember?
Knowledge is power.
Do your research.
Understand those companies.
Stay informed about the market.
Discipline is key.
Have a plan.
Stick to it. Manage those emotions.
Be wary of scams.
Anyone promising you easy money?
If it sounds too good to be true.
Probably is. And lastly, have fun.
Yeah, enjoy it.
It can be challenging, but also rewarding. Embrace the learning. Remember, everyone makes mistakes.
Absolutely.
So go out there, explore the market, believe in yourself.
Happy trading, everyone.
And that's a wrap on our deep dive into the naked trader.
Thanks for joining us.